Good afternoon, everyone, and thank you for joining us for today's Cherry Becker webinar. My name is Arlene Labrador, and I'm a Strategic Solution Manager with Cherry Becker, and I will be your host today. We have some great content planned for you today. I'm happy to welcome our sales use tax experts, Melissa Lewis Simbali, Sales and Use Tax Senior Manager, and the leader of the Cherry Becker Sales and Use Tax Practice, Lauren Stimson. They will be presenting on how to take advantage of manufacturing sales tax exemptions. Here are some quick housekeeping items before we get started. If you have any questions during the webinar, please type them into the chat window located in the control panel. A recording of today's webinar will be available in a week, and it will be sent via email and posted to our website, www.cbh.com, where you will be able to view the presentation. Please reach out to me, Lauren, or Melissa if you have any follow-up questions regarding today's topic or a specific aspect of your business. We are here to help. With that, let's get started. Good afternoon, ladies.
Good afternoon.
That's great. Great to see you. Today, I have a question. My first question to both of you is, what have you seen as some of the biggest sales and use tax challenges and concerns for manufacturers?
Thank you, Arlene. Some of the biggest sales and use tax challenges that I've seen are really keeping up with all the law changes in all the different states. States constantly change their laws and regulations to keep up with the different types of industries, and they do tend to exempt more items for manufacturers. However, a lot of states are starting to tax more items, specifically when it comes to technology, such as software as a service, cloud-based computing, things like that. Another challenge is simply keeping up with the tax rates in all the different jurisdictions and filing the tax returns appropriately with the correct frequency. A lot of states require you to file monthly, and just keeping up with those monthly returns and all the different rates and all the different rate changes, state and local. And finally, in my opinion, a big challenge today for manufacturers is the ever-changing nexus requirements. More and more states have adopted economic nexus, meaning it doesn't take a person, an office, a location, or a physical presence to have nexus in a state. All you have to do is make a bunch of sales, make a lot of money, and then you will have nexus in that state. And then that creates not only a filing obligation, but you have to register in that state and pay attention to that state's sales and use tax laws.
And I'd like to just kind of add on to Melissa's comments. And a lot of the issues and a lot of the complexity around manufacturing, the manufacturing industry really focuses on the exemptions that the states give and really how to best handle those exemptions. And what we find is for most manufacturers, the tax decisions as to whether or not you take an exemption or you pay tax falls into either a purchasing responsibility or an accounts payable responsibility. And as Melissa said, the laws are constantly changing. The nuances of manufacturing exemptions are really gray, and really disseminating that information down to the people that are making the tax decisions on a day-to-day basis is really, to me, one of the biggest challenges that manufacturers face.
Okay. Well, now that you talked about challenges and concern, what manufacturers, where manufacturers are missing opportunities, and where do you see the most overpayments happening? And this is for both of you.
So I can start that one off. And Melissa and I have been doing sales tax consulting for manufacturers for probably more years than we want to count. So we've seen everything. So we'll talk about some of the hot issues or the kind of the most frequently missed opportunities. And the first one that I want to touch on are repair parts. So in my experience, most manufacturers know that kind of that big production line equipment generally is exempt and generally is not the source for overpayments, but it's really the repair parts for those machines. So knowing what the tax laws are, how they treat repair parts, and knowing what repair parts are actually being put onto the machine, that's really a missed opportunity for many manufacturers.
Yeah, I agree with that as well. Another item that is a struggle when it comes to sales and use tax is material handling equipment. And are things like your forklifts, conveyors, anything that moves the product around the plant. And when you look at when you're purchasing forklifts, you have to take into consideration where your production process starts and where it ends. And this is a huge thing. This is a huge thing that manufacturers often do not know for a particular state is where the production starts and ends. In some states, it starts when the raw materials are brought into the door and where the product leaves the finished goods area. And then some states, it's much smaller manufacturing process. It's where the product touches the first machine and it's where it leaves the last machine. So when it comes to forklifts, depending on where the forklift is used in the plant, it may or may not be exempt. And then there's those states that have a predominant use exemption where you use that forklift for both a non-production manner and in a production manner. And some states will give you that forklift if it's predominantly used in manufacturing. If you use it more than 50% in some states, they will give you the entire forklift as exempt.
So word to the wise, look at all your forklifts. Kind of the third area I want to touch on is on production supplies. And you'll often hear in the world of sales tax, DOTS, depends on the state. And that's ever so important when you look at production supplies, because some states will give supplies that are coming in direct contact with the product. Some states provide exemptions for supplies that are rapidly consumed in the manufacturing process. Some states will have a necessary and essential. Some states will have a necessary and integral, and you'd think there was a lot of overlap, but sometimes there's some items that will qualify for essential but may not be integral. So really taking a look at that very granular level of what the exemption is around production supplies and applying it to your specific manufacturing operation.
Another area we see overpayments is the R&D exemption. Some states provide an R&D, research and development exemption. And this not only applies to research and development equipment, in some states they will also give you lab supplies, anything that goes into research and development. One of the most common items missed for the research and development exemption is software. Some states will give you any software that is used in research and development. And you need to look at the definition of research and development in a particular state. Some states define it as researching and developing a product, whereas other states will give you research and development if you're improving a product. So it's important to look not only at what it covers, but what the definition is.
The next area of kind of missed opportunities is with maintenance supplies. So again, depends on the state, but a lot of states do include maintenance supplies. So equipment used in a tool room or the equipment that's used to actually repair the production equipment. A lot of states will expand the exemption to include that auxiliary equipment, such as maintenance maintenance tools and supplies. So again, be very granular with your understanding of the exemptions, because that is where some hidden tax savings can lie.
And then the next area is pollution control equipment. And like R&D equipment, it's important to understand the definition of pollution control in a state. Some states will give you only air pollution, some states will only give you water pollution, and then some states will give you only equipment, whereas other states will also give you chemicals involved in pollution control, such as water treatment chemicals. And I've seen some states that only give you water treatment chemicals if that water is being dispersed out of the plant and back into the river or the lake or wherever it came from, but they won't give you chemicals if the water's coming back into the plant to be used in your process. So it's important to look at each state's definition of pollution control and what it covers. In addition, pollution control equipment in some states must be certified by the EPA, which is the Environmental Protection Agency, or the state equivalent of the EPA. However, more and more states are going towards the trend of not having it certified. As long as you can prove that it's for abating pollution, they will give you the equipment and any supplies.
So I hope you can all see the trend that we're starting to communicate is that the exemptions are so state specific. It's really important to understand those specific nuances and that granular fact pattern of your manufacturing company as it applies to the tax laws. But a couple other cash saving opportunities that we see frequently centers around some non-manufacturing items, and that's with real property repairs. So again, varies from state to state, but most states, if you are doing a real property repair and a contractor is performing that service, that is a non-taxable situation. So setting up your contract properly can be a cash savings opportunity.
Yeah, I agree with that. And kind of along those same lines, to real property repairs are other types of repairs, untangible personal property. Some states will tax those and some states will not tax repair labor. And also there's a handful of services where states are probably 50-50 on whether or not they tax them. And if you have plants, all over the country and you're used to paying tax on pest control services, landscaping, janitorial service, you may see an invoice in a state that doesn't charge tax on those, and you might accrue tax. So we do see where some services are taxed and they should not be taxed because they're exempt in a particular state.
Okay. Well, thank you. That was a great information, and I'm pretty sure the audience are taking notes. But I have one more question. Oh, well, one of many other questions, and I hope we get the time. Can you guys share with me on the experience that you had being consultant, sales and use tax consultant, any strange situation, unique exemptions that you have seen doing the work as a consultant?
I wish we had time to go over all the unique situations we've seen as consultants, but one of the most interesting ones I've seen, it was the most interesting. I would just say it was kind of unusual. I was taking a plant tour, and this was probably 20 years ago, and it was a plant in Georgia. And we were walking around the plant, and I see next to a machine that had molds on it, a tub of, it looked like grease. It was a white substance that looked like grease. And I didn't know what it was. I asked what it was, like I did with every other thing in the plant, and it was mayonnaise. And the way they used this mayonnaise was to help get the product out of the mold. And they said that they had tested all different types of substances, and I don't know how they got around to testing mayonnaise, but they said mayonnaise outweighed every other substance they tried. And in that year, this was a long time ago, in that year, actual molds and any types of chemicals related to molds were taxable. However, because mayonnaise was a food and was exempt, we were able to get tax back on those purchases. It wasn't a lot, but it was funny.
Interesting. What about you, Lauren?
Yeah, kind of along those same lines, something that just has always stuck out in my mind is when I was working with a manufacturer and I was reviewing all their purchases, and I just kept seeing all these purchases of Mr. Bubble. That kids, hot pink Mr. Bubble that you put in for kids' bubble baths. And I finally just had to ask them, hey, what's with all the Mr. Bubble? And it turns out that they were using it as a lubricant in the manufacturing process, and because it came in direct contact with the product, we were able to get an exemption on Mr. Bubble.
Hmm, good for the manufacturers that you were doing using Mr. Bobo. Very interesting. Thank you both. Well, Lauren, with manufacturers having their team making sales tax decisions, either at the centralized level, meaning headquarters or shared services, or at the plant locations level, how can they feel confident that they are making the right sales tax decision?
Yeah, and this is a great question because anytime you get to where you have those tax decision makers, and I spoke about this, earlier, the people in purchasing or the accounts payable, anytime you get them farther removed from the manufacturing operation, there's some knowledge that evaporates, and they don't. It's harder to have that knowledge, what something is, how is it used, kind of those two essential ingredients to making a good tax decision. By being farther removed, that information is harder to get, and it becomes even more important to be very intentional to reach out, get those questions answered so that sales tax decisions can be properly made because they're not sitting at the plant seeing that those purchases come in every single day.
Okay. Thank you, Lauren. Melissa, I have a question for you. How will a manufacturer communicate to vendors to stop charging sales tax?
So if you have vendors, if you decide that an item that you're purchasing from a vendor is exempt for one reason or another, either it's a production supply like Lauren mentioned, repair part, or something that is exempt in your state and they're charging you tax, you should issue them an exemption certificate. The reason they're charging tax is because they're legally obligated to do so. They have to charge you tax unless they have some sort of documentation certifying that the item is exempt. And when you give an exemption certificate to your suppliers, again, it depends on what state. The states require the basic information on an exemption certificate. You know, obviously the name of your company, the name of the vendor, the date, the reason for the exemption, signature, and then another date on the signature. There are other states that require more information on the exemption certificate. Just make sure that you complete it accurately so that it is valid and is it accepted by the vendor. And then at that point, they can stop charging you tax.
Okay. Lauren, what about those vendors that sell both taxables and exempt items like Granger? Can you comment on
Yeah,
that?
I like to call these the everything under the sun vendors. So those vendors like Granger, McMaster-Carr, MSC, those are kind of some of the three big vendors that we see quite frequently. And typically for manufacturers, they're buying both taxable and exempt items from those suppliers. So you can handle it in a few different ways. First, some of those vendors have the capability to specifically charge tax on some lines and not charge tax on other lines. So if a vendor has that capability, that's certainly one good way. However, there are some vendors that don't have the systems set up, and you're either completely taxable or you're completely exempt. And that's where you really have to be very focused and intentional, because if you're buying something that's exempt and the vendor doesn't charge tax, that's great. But then you have to make sure that you're accruing the use tax on the taxable purchases. Likewise, if they have you set up as taxable, you've got to figure out a way to deal with the exempt charges. So another way that you can handle vendors like this is almost set up two accounts, where for one account you're purchasing everything that's exempt, another account you're purchasing everything that's taxable. Or do different POs. One PO is all taxable, one PO is all exempt. But there's several different ways you can handle this, but it is a big challenge. It is one of the biggest areas that we see missed opportunities and refund opportunities because of these type vendors. So make sure if you're dealing with some of these common vendors, or you're dealing with suppliers that sell both taxable and exempt, that you have a good plan and you stick to that plan and you're very consistent with it.
Okay. Melissa, question for you. How is the pandemic still impacting sales and use tax for manufacturers?
Well, like everybody else, the pandemic has had a huge effect on manufacturers, as well as the audit cycle. A lot of states are struggling for funds and for revenue. And what's a better way to get revenue than to audit? And that's how states like to recoup some of the funds that they've lost during the pandemic. And even pre-pandemic, auditors would their audit frequency would increase whenever their budgets weren't balanced. So we are seeing more and more audit frequency as a result of the pandemic. And not only are states getting revenue for the tax overpaid or underpaid, I'm sorry, they're also getting the interest and penalty involved. So that's even an extra bonus for them.
And I'd just like to kind of jump in on another issue that we're seeing is I'm sure most manufacturers, they've experienced supply chain disruption and they've suddenly had to shift gears and find new suppliers because their current supplier did not have either the repair parts or inventory items or supplies that were needed. So they've had to go out and source new suppliers. And with that comes that issue that Melissa spoke about is every new vendor, you need to understand what you're purchasing, if it qualifies for exemption, and make sure you are giving those exemption certificates to your suppliers. So new suppliers coupled with a remote workforce and a workforce that has had a lot of turnover, we're really starting to see the effects on sales tax and missed opportunities or missed areas where tax is due.
Okay. Well, I know one of the biggest fear for everyone on this webinar is sales and use tax audit. What tips can you share with the audience to ease the pain of an audit, Melissa?
So, like I said, I mean, we're seeing more and more audits, and it's not just because of the pandemic. It is also because of, the obvious, the economic nexus laws that have caused more and more states or more and more companies to have nexus. So more and more states are auditing. And one of the things we tell manufacturers, as well as, other clients that we represent, is even before you're notified, or even if you are notified, there's a way to kind of do a preemptive strike. If you get an audit letter, first thing you want to do is see when the auditor wants to start. And if he wants to start tomorrow or next week, you can always push him back some so that you can do some sort of a mini audit and look at where you think you stand with the auditor. Or even if you're not notified, it's good to do this at least once a year. And what we recommend is taking, a month of your purchases, a month of your sales, look at all of your fixed assets for the last 3 years, and look on the purchase side where you're not being charged tax. And if you're not being charged tax, why aren't you being charged tax? Is it because you have an exemption? Or is it because the vendor's out of state and they don't have to charge you tax? And also, if it is because of an exemption, make sure that you have issued an exemption certificate to your supplier. And on the sales side, make sure that, and we see this in audits all the time, where auditors, they can look at your purchases and your sales. If you are almost or 100% wholesaler, even if you are, and and the auditor knows, and everybody knows that that sale is exempt, if you don't have a valid exemption certificate, the auditor can assess that sale. And a valid exemption certificate means it's completely filled out, it's not expired. And we've seen auditors have a field day with exemption certificates that aren't signed, aren't dated, are 2 years old, and that particular state has a 1-year expiration date. And we've seen big assessments because of outdated exemption certificates. So, do a review every once in a while to make sure that the certificates you receive from your customers are up to date.
Okay. Well, thank you. Lauren, I have a question for you because I'm sure you have heard the same saying many, many times. I am a manufacturer. Everything I purchase is exempt. Any comments?
Well, I wish for all the manufacturers that that was a true statement that everything that was purchased between the four walls of their manufacturing facility qualified for some sort of exemption. But unfortunately, that is not the case. And if that's the mindset, they probably do have some exposure and some risk that they need to deal with. But um, Again, it goes back to understanding what you're purchasing, understand the nuances of the laws, understanding the beginning and ending points of production. I think that's really key with understanding what the taxable purchases are, because there are many states that have a shortened beginning and ending point of production, and things that fall outside of that scope are taxable.
Well, we have 5 more minutes of the webinar, and I have so many questions for you guys. That means that I'm going to try to make it happen. Melissa, I have clients that have decided to engage in managed compliance agreement with the state. Could you explain what is a managed compliance agreement?
Yeah, quickly I'll explain it. It's basically a way to reduce your administrative burden of making a decision on every single purchase of what is exempt and not exempt. It's basically doing a review of your purchases for a period of time, going to the state and letting them know and making sure they agree that this percentage of your sales or your purchases every month are taxable. You buy everything exempt, and then you accrue that percentage every month. It saves a lot of time on a day-to-day basis of making a tax decision. And just to let you know, some states have formal managed compliance programs and some states don't. And there are states that will not do this. However, some states that don't have a formal program, we have seen that if you present good data and good evidence that this percentage is exempt every month or taxable every month, we've seen states come to an agreement with us. So it's a really helpful way to reduce the time it takes to make a decision on a daily granular basis.
Thank you. Lauren, keeping up with sales and use tax can be so overwhelming and challenging. I'm pretty sure we have not covered all the FOMOs for manufacturers, the fear of missing out. What concerns, what other concerns manufacturers should be aware?
Well, certainly, the last 3 years have been have brought a lot of changes with the world of sales tax, with Wayfair and Nexus. So make sure that you are taking a look to make sure that you are in compliance with everything going on in the Nexus world. The second thing is really document your processes so that in the event of an audit, you've got a good record of why you're doing what you're doing, and that legwork and preparation will show auditors that you know your stuff, you know your process, you know why you're taking exemptions, and it will give them confidence that you have your house in good order. And then really, you know, around sales and use tax, I think there's a lot of value that can be brought to an organization with exemptions. So again, understand your exemptions and how they apply to your company for some cash savings.
Great. I bet everyone in this webinar has heard the following terms: reverse audits, overpayment review, sales tax recovery. Can you explain these services and why manufacturers benefit so much from it? Melissa, this
So
is
a
for you.
reverse audit or an overpayment review is basically helping a manufacturer recover overpaid sales tax while teaching them how to stop overpaying so they don't overpay in the future. What we don't want to do is go into a company and do a reverse audit and then come back a year later and do another one and have it be higher than the previous year. We want the refunds to go down just because we want everybody to learn where they're making overpayments and how to stop that by either issuing an exemption certificate, through training your staff to make the appropriate taxing decisions. But reverse audit is a very helpful way to recoup some overpaid tax. And some states will actually give you interest on that. And we definitely don't want to leave money on the table, especially with the Department of Revenue.
Okay, well, my last question, I think, for today, and I wish we have more time, but once manufacturers has completed a reverse audit, how can they improve their sales tax process and feel confident that they are not missing out on cash savings exemption moving forward?
So, this speaks to my heart because I love doing reverse audits. I love getting cash savings and cash recovery back for manufacturers and for my clients. But really, I think the heart of the value is really training the folks that are making those tax decisions. Getting that information down to that granular level so that overpayments and underpayments don't happen in the future. And with all of our reverse audits, we always do training. So that is, to me, the number one way to make better sales tax decisions.
And not only in conjunction with a reverse audit, we also offer training on a standalone basis. I've actually been doing quite a bit of training for clients that just prefer to have the training right now, and they might have a reverse audit later. But I've gotten excellent feedback, and somebody always learns something when you do a state by state training. And we do it state by state. We don't do several states in one presentation. We really drill down to the transactions by state. So that is one thing we offer as well. We offer it in conjunction with the reverse audit as well as standalone training.
Well, thank you. Like I said, I wish I have more time. I wish we have the audience more time. Thank you for answering all my questions. I know that we have, I think we have some questions on the chat. I know that we are at 1:31 and no people need to run and put their self, but I'm not sure if you guys want to answer one or two, one of these questions.
Sure. Yeah, because
And
we have some great questions here.
yes,
So
that would be great. And whoever wants to stay with us. Few of the questions and the other ones we will answer by email.
yeah, so one of the questions that Dawn wrote in are cleaning supplies for cafeteria and bathrooms for a manufacturing facility taxable? So in most states, yes, those are going to be taxable, but we have won some exemptions for more of a sanitation chemical in like food operations. So again, it depends on the state, it depends on your industry, but we have seen some exemptions. We have seen some wins in that cleaning chemical area, but I don't think we've gotten anything for janitorials for the bathrooms.
Okay. Melissa, do you want to take one?
Sure. I see one here. If we believe we've overpaid sales taxes, what is the best way to claim that back from the vendor? And that's a great question. If you overpay tax to the vendor, again, it depends on what state. Some states will require you to go directly to the state and claim that money, file a refund claim. However, some states will allow you to go back to the vendor, and then the vendor will in turn go back to the state and reclaim that money. Whereas other states will require you go to that state, but then you have to go to the vendor and get an assignment form letting the state know that they remitted the tax. So there's all different ways. You need to look at that individual state laws. My suggestion, if it's just a couple of vendors and the state allows you to go to the vendor, I would go back to the vendor because you don't want to file claim for just a couple of, vendor paid tax.
In summary, manufacturers are exempt. It varies from state to state, and it starts with you need to figure out when production begins and when production ends in every of the states. That means that I wish we have more time, but Lauren, I will let you kind of say
Sure.
kind of the goodbyes today.
Sure. So we didn't get to all the questions. So we will reach out to you if we haven't addressed your questions. But we very much appreciate all of you being here today. Just a quick disclaimer. So the information we've given today is general in nature. And as I'm sure you can see, sales tax is very state specific and fact specific driven. So um, if you've got any specific questions, feel free to reach out to us. Feel free to reach out to your tax advisor. Hopefully your tax advisor is us, but feel free to reach out to us for any additional information because we are always happy to help.
Okay. Well, I appreciate everyone's time today, and like Lauren said, please let us know if you have any questions or concerns. As I said before, we are here to help. Have a great afternoon, and looking forward to hearing from all of you.